As you know, we from time to time continue your education, and one of the favorite ways we at candlecharts.com do that is by giving chart challenges. So I'll show you one, you'll hear my questions, and then you can put the video on pause to think about it, and then you'll hear my answer. And again, it doesn't matter what market you trade in, whatever I go through now will be universally applicable. So, is this hammer a good potential trade candidate? Right over here, why or why not? And then we have three doji, one, two, and three. And with that in mind, let me know how you would view these doji in the context of the market conditions. And with that, put the play control on pause. And then he'll hear my answer. Okay, so let's go through these. So this is a classic hammer. This actually almost for those of you who have our mega package or our Nison candle scanner, this is a strict criteria hammer. That's a hammer with a white wheel body that closes at the high of the session. This is very close to being at the high of the session, so I'd view this almost as a strict criteria hammer. Remember, regular hammer can have a black or white wheel body, but strict criteria has a white wheel body. And what's nice about this, as with any other candlestick signal, if it confirms a support or resistance area, the odds of it working are much higher. So notice how the low here is confirming the recent low. And then the next question is this a good potential trade candidate from the long side? Now, everybody has a different price target. Candles do not give price targets. I personally look at recent highs. So I would be looking at a target over here with this bearish engulfing pattern. So to me, this would not be a great trade at current levels if you wait for the close here, because your risk is down to here and your target is up here. So that's let's say a 1-to-1 risk reward, which is not great. However, one of the things we do here is wait at candlecharts.com is if it's not a good risk reward, we wait for a possible retracement into the lower shadow. So if it gets, say, halfway into the lower shadow, one can think about buying it. And by doing that, if you're buying it here, your risk is here and your target is still over there. So you've decreased your risk while you left your profit potential the same. In other words, you've increased your reward to risk ratio. Now let's look at these doji. The first doji to me wouldn't get me nervous because it's kind of in the middle of a trading range. The market's not overextended. The doji here to me would get me nervous because it's confirming a resistance area. Also notice the long upper shadow, almost like a gravestone doji. So if I was long, this would certainly be a day I would consider to take some profits. Obviously, no way to know the market's going to break out. But one of the things you could do with candles is also trading for breakouts. So if the market, see this resistance over here with the bearish engulfing pattern and the doji, and once the market closes above it, that could be a breakout trade, especially with a rising window. And with this doji over here, I would not go short because it's a new high close, but the fact that you had a doji shows that the bears are taking a little bit more control than would be the case when we had the tall white candles. So this would be a good time to take profits, especially since the market is overbought. Look how fast it rallied over a short period of time. So I hope you found this chart challenge useful, and to continue taking more chart challenges and continue getting your free ongoing education, make sure you join candlechartsacademy.com. We have lots of great free stuff. Thanks for joining me.